What's up, guys? A lot of people are kind of waiting for the market to recover, right? And then we can finally party and have that 10x that we are all dreaming about. However, there is also something possible which gets you a 10x without actually the market making a 10x, and that's being a little more active on your portfolio. We don't have to wait until the full bull really strikes. Now, it depends per person. For one, the best strategy is just to buy, wait, and sell whenever the market seems toppy. And although that might be the safest and therefore maybe even the best strategy, if you want to be a little more proactive in crypto and feel like, okay, I got this if I use the right strategy, then there is way more to make out of it. Because people always look at their altcoin on the dollar pair, right? And that's what it is. Well, there's more than that, and I'm going to show you in this video. So if you're interested, please like the video, subscribe to the channel, turn the bell notification on. Check out the Patreon down below for my portfolio updates, influence wallet trackers, etc. And let's jump right into it. So what I said is you can, of course, take a look at, for example, let's get with Joe. Joe is a project built on the Avalanche chain, totally irrelevant for this video, but for you to know, right? Now, if you feel like I want to buy some Joe, what do you look at? You will probably look at the Joe dollar valuation. And although that's fine, there are more valuations that you can use. What I would suggest you can at least research and not necessarily apply right away, especially do that if you like this. I don't want to keep this short. What you can try to do for yourself is look at your portfolio and reshuffle the professional way. Okay, so let's get into that. If you have a portfolio with, let's say, 10 coins, right? In the bull market, they all kind of move together. And in the bear market, they all move kind of together as well. Within that market, there's always an exception in these coins, right? You can have Joe that pumps 20% on the day, while, for example, AVAX goes down 3% of the day, right? If they are both in your portfolio, you can put one in the other. Now, a lot of people, they still feel like, but how should I do that? And how should I calculate if that's actually worth it? Well, that's very simple, because we now, for example, again, look at Trader Joe on its dollar pair, right? But what we want to do is compare Trader Joe on its dollar pair divided by, in this case, AVAX on its dollar pair. Right? So we know what Joe is worth against AVAX. So if you look at this chart, for example, this is what you can see now. Let's say that it's a few weeks ago, right? And that we were sitting at the bottom right here. That means that Joe is at the bottom on its AVAX pair. So instead of using dollars as your valuation right here, you can use AVAX. So if you do not have dollars, if you do not have USDT or any other stable, but you do have some AVAX in your portfolio, you might be like, hey, Joe is quite low against AVAX. Maybe put some AVAX into Joe, right? And that's what you can see right here. Every time we got to this bottom, it had a pretty decent pump, right? Every time we got there, it had a pump of at least 50%. You're not making money this way, right? You're not making stables necessarily, but you are making more coins, right? Because if I have one AVAX, I can put it in Joe right here, right? And if Joe then goes up against AVAX, yeah, that's nice. I can get more AVAX for that, right? So that's kind of how you can play that. Now you can compare kind of all the coins there are. So let's get into some less hypothetical things right here. For example, Polis. On the day, it's up 8%. However, let's go with Illuvium is down 8%. So how is Illuvium doing against Polis? Because that might, be a trade to buy some Illuvium with your Polis. Okay, so what you want to look at is ILV USD. Here we have it, so it exists, divided by Polis USD. That's it. You don't have to click anything. Just press enter on your trading view. And you can see this right here. Illuvium against Polis is down pretty hard the last week, basically, right? Because probably Illuvium went down, Polis went up, right? So here you can take a look at this chart and be like, okay, nice. Now I'm going to spend some Polis on Illuvium. That's how you can, reshuffle your portfolio and make sure that you are getting more and more and more coins by trading these ranges without having any dollars involved. Because that's a problem for most people. They say, I'm broke, right? And that's fine. Well, it's not fine, but that's what it is, right? If you're broke, yeah, you cannot buy more crypto with cash, but you don't always have to. Shut up. You don't always have to. That's the nice thing about it. Got some questions before I spoke about this on Bitcoin pairs as well, and somebody asked like, yeah, but some coins, they don't have a Bitcoin pair on Binance. Doesn't matter. If you, for example, want to buy some Illuvium with your Polis, what you simply do, sell $500 worth of Polis and use that $500 to put it in Illuvium. That's how you do that, right? That's the trade. You don't have to have direct pairs on an exchange to do so. This is really a way, and this, you can do this for like days, weeks, just comparing different pairs of altcoins, right? Like, hey, you can also look at your portfolio like, I don't have a lot of Foco Forged and I want to maybe buy some more. So type in Foco Forged. The first thing that you fill in is the thing that you want to buy, basically, right? Or sell, that you want to trade. But I do have a lot of Seedify. Is it worth to put some Seedify into Foco Forged? So we divide this by S-Fund, right? And then we can see this. So although it is quite low, right? It is definitely quite low. Foco Forged just had quite the run compared to Seedify since April. Now, you can back that up by looking at Foco Forged. We have it here, right? So Foco Forged since April went down, right? 4x, well, slightly less, 3.5x or so. But if we look at Seedify, right, went down 5x, went down harder. Right, so therefore, Foco Forged is worth more now against Seedify. So again, if you feel like I have a lot of Foco Forged and I want to maybe get some Seedify, or I have a lot of Seedify, I maybe want to get some Foco Forged with it. Maybe now is not the best time. It just had a good pump, but who knows? But this is how you can compare different assets against each other. And I think that if you reshuffle your portfolio this way, you can do very well. That you can do very well, because you can also look like, hey, Foco Forged is now pumped against Seedify, right? And maybe you can find some kind of a resistance at this level around here, right? So kind of just broke, actually. If it was still below it and you thought like, yeah, I don't know, but it's probably going down, then you can better maybe sell your Foco Forged and buy some Seedify with that money. This is being more active in your portfolio. And I think that that's eventually, if you play this right, at least, better than just invest and wait, right? Because this way you get the most out of it. Another one, just to give you some examples, right? Let's say you want to buy some Altora and you have a lot of super, right? So Altora USD, let's divide it by super USD. Let's see how it does. I don't think it does that well though, but hey, here we go. Completely crashed. In a week, it's down 74%, right? It's not because Altura necessarily went down that hard that week. It's also because super pumped super hard, right? So you can now see that Altora on its super pair is down really hard. If you believe in Altora, then you might feel like, okay, I want to take some money out of Super and put it in Altora, because at a certain point, right, it might have a bounce, right? Maybe not all the way up again, maybe. It depends what you believe, but that would be a crazy amount, right? But these are good ways, because also this is a way to hedge in case Super crashes, right? Because it went up already very hard, could go down very hard. I want to make the video longer than this, but I don't think I need to. I would say get TradingView if you do not have TradingView, because this would really help you, and you can play around like this for, like I said, a long time and compare all kind of different tokens to each other and really try to make the most out of your portfolio. And that way, at a certain point, if you do this long enough, you will have such a great position in good quality tokens that are at lows compared to other tokens, that I think that when the market turns around, that they could pump extra, right? You should always ask yourself, though, it's not as black-white as I say it right here, because you should always ask yourself, like, why did a certain token go down that much? Okay. In this case, like I said, research it. Week November 20, look at Altora. What happened in that week? Did it crash that hard? It crashed 14%, right? So Altora did not crash that hard. November 20. Let me see. That's here for Super. So why did the chart look like the way it looked? Well, like we said, Altora went down and Super went up. So, of course, Altora on its super pair completely crashed, right? You always want to look at what's the reason something went down, right? It's not because Altora is bad. It's just that got completely out of control, this ratio. Short this time, but I hope it's helpful. Try to apply, just play around maybe with a little part of your portfolio. I don't know, do whatever works for you. But I never really heard somebody talk about this, and I thought this is actually a pretty good way to deal with your portfolio. So let me know if you like it. Like the video if you like it, then I know. Can we get 120 at least for this one? It's shorter, so people should be able to dislike me less this time. Thanks for watching, and have a blessed day.